Hi all, this is Ben Parker from PFX Capital. We're now going to look at an indicator called the Relative Strength Index, also known as the RSI. This indicator, again, same as stochastic, is used to find overbought and oversold situations. We like the settings of 14, and again, it is best used on longer term time frames such as the 4-hour, the daily, the weekly. Here we have the daily euro dollar, again, the same as stochastic. We're just going to go through how we feel this should be traded. As we can see, we have RSI oversold here at the 30 line, and we also have stochastic overbought here, these two sections on the above the 70 line. Now again, this indicator works similarly to the stochastic in that we really want RSI to be moving out of these two lines before we trade. The fact that price and the RSI has moved below the 30 line represents that we should be looking for an entry soon in the opposite direction. Now obviously we can see RSI has moved down here into the oversold, like the stochastic, but has started to move out here into long territory where we could look to buy, and as we can see fairly accurately it has predicted and it has gone up and then into overbought territory again. And as soon as it has moved out, the same as here, we then see a little downward movement but kind of hovers in the middle, signifying that it hasn't actually reached a real oversold territory then, so we should be looking to buy again. But due to the fact that this hasn't reached oversold yet, we could be looking for a buy entry in which we would use another indicator as kind of a confirmation, such as the stochastic, to indicate a move upwards from here, out of this range. Obviously we can see again that RSI has moved here, along with this upward trend, into overbought territory. And we can see along with this range here, we can see that RSI is then broken out as well. Now, we do like to use the RSI in conjunction with the stochastic oscillator, just for the fact that you kind of get two kind of views on it. You can see that RSI is oversold, and you can also see that the stochastic oscillator is oversold as well. This gives us two kind of indications that it might be a good time to buy soon. Whereas the RSI is a bit more kind of volatile, the stochastic gives a much more smoother entry. That's why it's probably good to use both of these in conjunction with each other to pick out trades, instead of just the use of one, to give a more defined entry. Obviously we can see that we have a clear entry here, but it might have been a bit stuttery on if we'd have only been using the RSI. The same again here. We've had a sell entry here, which is quite clear here. But we haven't really had a good oversold indication through here and along with this range bound action here. But even though the RSI has stayed kind of central, the stochastic has gone in oversold and has given us an entry to go long here, whereas the RSI has not. But the stochastic has now given us a range bound entry from the RSI, which gives us another good price to get in at, that we can actually double up on our trade into the long position following the trend. We hope this has been helpful to you, and if you have any questions or queries regarding any of these indicators, please do not hesitate to contact us and we will try and answer you as soon as possible.